Welcome to the Core 4 Show. I'm Coach Brandon, and I'm here to help you guys to understand how it is that the Core 4 journey is making us successful. I mean, one of the biggest things that I get asked, I try to tell you guys each week some of the topics that are coming up, but one of the big topics that are coming up is, how am I chasing my dream? And I said this would be a good topic for our show. One of the big things that we have to understand is that in this space, there are lots of different opportunities out there. And the opportunities, good, bad, ugly, and different, you have to evaluate them. And so we use the Core 4 coefficient to evaluate. It's a free spreadsheet that we give you guys so that you guys can analyze the opportunities that are presented before you. And the deal is that what I'm realizing is that a lot of people don't mind if there are scams out there. People are joining these scams left and right. They're just hoping that they get in early enough so that they can get paid and then get out of there before, it crashes in on them. That's a bad idea. Number one, it's understandable that we're all trying to make an opportunity, but there's so many other ways that you guys can achieve your dreams. It may take you 2, 3, 5, 10 months longer. Who cares? The whole idea is that you're going to be able to get there. And so there's alternative ways to make income. And so we have several ways that we do it. But the first thing that I want you guys to understand is how we approach making money here at Core 4. So the deal is there's lots of different people out there that are sharing stuff with you, whether they're telling you the truth or whether they're not. What we can tell you is that we're willing to show you every single detail of how we're doing it. And why are we doing that? And it's only because, there's so many different types of charlatans out there and people out there that are trying to guide you and misdirect you. And then sometimes it's just uneducated, uninformed. I have one of my students because I teach basketball, and he's going through some changes right now. He's going through some troubles being able to take the skill sets that he's learning with me and also how to apply effort. And so he's learning how to work with other leaders. And those other leaders aren't really able to help him to grow and to identify into the type of player that I'm setting him up to be. And so he's missing some of the key ingredients that I'm teaching with them because the leadership is wrong, because they're not, I don't want to say quite qualified or whatever. They're just not able to draw out some of the same things that I am able to draw out in terms of leadership because I'm providing the skill sets for the pattern recognition. And so when you start to learn patterns, you don't have to learn them because you're a Forex trader. You want to learn these patterns of success because you can identify opportunities that will help you to grow, and you'll be able to take the skills that you have and apply them directly to those opportunities. And the professionals that are out here, whether it be basketball, football, baseball, whatever else, they actually can anticipate what the opportunity is for the window that opens, and they're as the window is opening, they're passing through with that skill. That's what makes you a pro. So, what we want you to do is watch our journey. And if our journey takes us to a level of professionalism that meets your needs, then so be it. This helps us to stay focused. It helps you. We work on mindset. We work on investment strategy, active and passive. We work on retirement, and we also work on different types of, what did I say? Getting rid of your 9 to 5. I haven't said it all week. So anyway, without further ado, we have an amazing team. James is not going to be with us tonight. So right now it's Chris. Chris Pulver is one of the top traders in the world. He's one of my very dear friends. And so we're going to bring him on because we're going to go through the Core 4 opportunities. And so he's one of the major ones. Okay. So sit back, relax, and enjoy Chris. What's up, buddy?
Hey, Brandon. Happy Sunday, Core 4. How we doing?
We're doing great, man. How about yourself?
Good. I just got back from Chicago. I was in a conference this weekend with Tasty Trade. So it was fun to see the team, hang out for the day. The venue was great. Weather was awesome. I got to hook up with some family on Saturday. So they came up from Indiana. I stayed in Chicago. So it was a win-win.
So what is Tasty Trade? Tell us what that is.
Well, Tasty Trade, although it has a funny name, it's a very serious broker in the industry. They are where I've been trading stocks and options for the last several years. They're where I manage my money for clients with stocks and options portfolios. So for me, I mean, I can trade cash accounts, margin accounts. I can trade IRAs. I can trade LLCs, family trusts, corporate accounts, and I can trade any instrument, any asset. There's no restrictions. I can trade stocks, options, ETFs, futures. I can trade currencies as well. I can trade crypto as well. So they don't have any restrictions as far as instruments. I'm very fortunate that I have a good working relationship with them. My commissions are extremely low. So basically, I pay a very inexpensive commission and zero exit commission. So when I enter trades, it's cheap. When I exit, or I'm sorry, when I enter trades, it's cheap. I exit trades, it's zero. So I'm very happy and fortunate in that working relationship where I manage some money with Tasty. They're a great broker, and actually they just I think the last 2 weeks they launched Tasty FX because IG, the global broker, the typical commitment traders reports you see, like it's sponsored by IG, one of the biggest global brokers in the world for forex trading. IGUS is now called Tasty FX because the brand is starting to carry a lot of weight, and they treat clients very well. Their support is on point. Their tech and their plat tech is awesome, and I'm very happy that I'm there as a broker. Like I say this, trading is hard enough.
Yeah.
And the last thing traders need to experience is a broker that is doing things to make things more difficult. In my experience in my career, I've had brokers, change servers on me for my robot trading. I've had brokers that have sent me compliance letters saying that I'm not generating enough income in my, merchant accounts, and so they're going to send me to another broker and they're going to close down my accounts and force me to liquidate positions. I've had weird things happen where there's flashy moves or flash crashes and certain feeds don't add up, and certain things happen to some brokers but not others. And look, I just want to be a trader. I just want to focus on the process. And so I will always gravitate towards brokers that aren't playing any funny business. They're not overcharging you for any fees. You just get to trade. It's like I said, trading is hard enough. We don't need brokers doing crap in the background.
So I hear, I mean, you and I talk all the time. So just going through, what has your experience been with non-US brokers?
Well, as a U.S. trader, it's terrible. I mean, if I mean, you and I talked last week. We had a couple of meetings. I would love to have a non-U.S. broker that houses my money. I would love that. But legally speaking, most regulated brokers will say we can't take your money. I mean, I only deal for clients and myself. I only deal with very highly regulated brokers. I want brokers that have deep pockets. The money is safe. Trading is what I have to focus on. I don't want to have to worry about money disappearing. I don't want to worry about, like, look, it's great if I could find out that, sure, I've got 201 leverage, 501 leverage, but if there's no real backing to that broker or somehow something happens where they really shouldn't be taking on U.S. clients, I shouldn't be associated with that. And my clients for the same way. So for me as a U.S. trader, my U.S. clients are in U.S. brokers or U.S. Client brokers. But I do have non-U.S. clients as well, especially in Forex trading. So I've worked with 8cap for a lot of years, TradeView, and Devisa, Global Prime. I've had brokers that have offered non-U.S. clients 200 to 1, 500 to 1 leverage, which is great for them. But for me as a U.S. trader, when a broker says we can't take you on as U.S. client, I read that loud and clear. Yeah. I'm not trying to do anything funny. I'm not trying to red flag their compliance department. So I will just stick with what I can do permissions wise, which as a U.S. trader, the best I can get is probably 50 to 1 leverage with a major U.S. broker. It's been that way for a long time. Now I can ask for more. Maybe there's something you can do within their permissions team, but I doubt it. I mean, Forex is it used to be the Wild West, but it's not anymore. It's a highly regulated industry. There's been tons of shakeups where once we saw, Swiss National Bank in 2015, we had Brexit in 2016. Brokers have changed a lot. We've gone from having, 50 to 100 brokers to choose from to, I mean, in the US, I have like 3 brokers now that I could really consider doing business with. And it's okay. It sucks in a way that I don't have the choices, but at the end of the day, I want my money to be safe. I want to feel like when I put money here, I just want to trade, grow my accounts. If I need to take out money, I get it within a couple of days. I don't want to hear any funny business of like, we're waiting and this and we got to wait. None of that. I don't want anything to be feeling, suspicious when it comes to your capital.
So thank you. And so let's talk about that for a quick second for people that may not know. So when you said 50 to 1 in the US and 100 or 500 to 1, so how does that really in 30 seconds, how does that really impact U.S. clients? I mean, is it 50-1 because now it's almost like the house wins more, being that the broker wins more?
No, no. I mean, look, 50-1 is honestly okay. I mean, when I first started trading back in 2007, 2008, my Forex broker was 100-1 for US clients. And so I had essentially double the leverage that I have now. But there's been a lot of reform over the last 15 years where, European brokers all of a sudden shaved down to 20-1. Australia, they had a big shakedown and reform where they were putting clients that were typically getting 200-1. They pushed them down to like a 20-1 leverage. Asia brokers 20-1 leverage. So what brokers do in this instance is if they lower the leverage for clients, they do that as kind of a safety feature where they don't let clients over leverage. They try not to. But here's the trick. If you don't understand how leverage works in a leverage market like Forex, you can easily over leverage your account. So here's an example. I did do this one time in my career. Okay. This was back in 2012 when the yens were moving. One of the best trades for me was a carry trade against the yen. So I'm long the dollar yen, long the Aussie yen, long the euro yen, long the pound yen. And I'm just riding this yen for a long time. This is when the dollar yen was going from like 80 and change up towards 100. And the big fundamental breakthrough would have been that the dollar yen target's going to be 100. Well, I'm trading the dollar yen around like 94, 95, 96. And I mean, I'm pretty certain based on the technicals and the trends that I'm leveling in and everything looks good. But I over leveraged. I had a $20,000 account at the time in Forex. This is back in 2011, 2012, one of my personal accounts, and 20 grand, and I levered in for 7 standard lots. Which, if I had 100-1 or 200-1 leverage, it would have been fine. But I had 50-1 leverage, and I remember this at night. And I was in a drawdown. I'll admit, like I got in a little bit early and heavy, and I was upside down like $2,000 or $3,000. And overnight, I put on another trade because the market had pulled back a little bit. And number one, I'm up all night because I was over leveraged, and that's an emotional lesson that everyone needs to learn. Like, don't trade if you're losing sleep over your trade size, it's a problem. But I was in these trades, and I added another trade. And as soon as I added, this was with FXCM as a broker, I added the trade in, and I heard this paper crumble noise, and all my positions liquidated.
Wow.
And I wondered what just happened. Oh my gosh. And I saw my balance go from like 20 grand to like 17 and change instantly. What did I do? I over leveraged. The broker only allowed me to take up to probably like 5 to 6 standard lots. And so when I put on that 7th standard lot, I exceeded my margin requirements. I exceeded what the broker allows me to trade with leverage. And so brokers in Forex, it's a lot different than doing this in stocks and options. Okay. If I have a stock assigned, the broker gives you a grace period of typically 1 trading day to fix your positions. So if you owe the broker, you can rectify that by closing out a position in options, taking the shares, closing the shares out, goes right back in, you go to cash, and there's never a margin issue. In Forex, brokers are a little bit trickier because if you over leverage, they will just liquidate all of your positions to get you back under the margin. So I went instantly to a, roughly a $3,000 loss, and I didn't hit my stop losses. I just over leveraged. And again, it's a terrible mistake. And I'm fortunate that I made it when it was at 20 grand and not at $7 million. There's a big difference.
Now, if you were doing 200-1 or 500-1, you would have been fine.
I would have been fine. Yep. I would have been fine. But okay, so what happens if I did it later at a bigger trade size and more leverage? I mean, I can look, it was an important lesson I'll never forget. Like vividly, I can remember sitting at a computer. I was in a high rise in downtown Miami, and my office was in my bedroom, and I was right next to my bed, like sleeping at the desk. And I put the trade on at 2 or 3 in the morning. Watched it, disappear for $3 grand because that was roughly my floating P&L. And I over margined, over leverage. I didn't even have to, send a message to the broker like, "What'd you guys do?" It's like I knew what I did. I over leveraged. So I've never done it since. And so that's why for me, I mean, 15 years later, it's like I'm trading very small and conservatively for even the accounts that I manage. It's like there's no reason for over leveraging, over margining, and ever having trade sizes that are too large.
I love it. Man, let's jump in and dive into what the economic news is. I mean, and with that horrible situation happened yesterday with the assassination attempt I don't know how that's going to impact the markets, but
Find out.
yeah. But let me jump in and let you do your thing.
Okay. All right. So what I'm showing here, this is year-to-date performance for the S&P 500. Obviously, we have a lot of green across here. I mean, it doesn't feel like a broad-based market, but when you look at this year-to-date performance, you can see some standout green, and it's household names, right? You've got Eli Lilly, which has benefited from Ozempic and weight loss drugs. Amazon, of course, having a great time. Google, Meta's up, Apple's up a ton, Microsoft up a ton. Nvidia's been the stock that could do no wrong. They were up to $1,200 and split for 10-1. They went from $100 to 140, pulled back to 129. One thing that's a little notable here for year to dates is you do see some consumer things struggling. So here's Nike, right? Nike's down 32%, McDonald's down 14%, Starbucks down 22%. These aren't, chump change stocks. Like Nike's a household name, Starbucks household name, McDonald's household name. Consumers are certainly changing patterns a little bit. I think that consumers are upset that a value meal at McDonald's can cost $15 to $20 now. It's not the same. Starbucks, I can't tell you the last time that I enjoyed going to a Starbucks because I hate paying $8 to $10 for a freaking coffee. Nike, I won't buy stuff from Nike unless it's on sale, which sometimes it is, sometimes it isn't. Everyone wants their Dunks or their Jordan sneaks. They're dropping for $200, and people scale back on discretionary items like that. So what people are spending on right now, people are sitting in a lot of household equity from appreciation in home prices, and they're sitting with fixed interest rates that are very favorable from the last 5 years. But consumers are now choosing to spend money in travel, spend money in hotels, experiences, but cutting back on probably the goods and retail that we're so accustomed to doing here in the U.S. So I just think it's important year to date versus the last week performance. Last week was a wild week. I don't think anybody really noticed unless you're trading the markets like we are every single day. But I just want to put this in perspective from last week. It was a pretty wild week. Monday, very boring, but made an all-time high. Tuesday, very boring, but made an all-time high. Wednesday started out very boring for the first maybe 2 or 3 hours of trading and then ripped to the upside before we had major news on Thursday. Thursday was CPI news for the U.S., which came in a little bit lower than expected, which the market got really excited about. And I'll explain what trades I'm looking at right now. But Thursday, we essentially made an all-time high to open the day and then just freaking flopped intraday. And we saw Apple down, Microsoft down, Tesla down big, Nvidia down big. We saw all the household names have been carrying these markets with major market cap. They dropped like crazy and pulled the markets down. But what didn't respond poorly was small cap. And this is what we've been talking about in the core forecast. Small cap is potentially the best catch-up trade this year because we have the SPY at all-time highs, the Qs at all-time highs. The Dow hit all-time highs earlier, but they've faded or been sideways since May. But the Russell has been sitting at this little resistance level around $200 on the IWM that has an all-time high at like 245 or 250. So there's a 20+% catch-up trade that if we start to see small cap get this relief rally because now the Fed is expected to cut rates. The Fed is possibly going to cut in September, most likely again in December. Going into 2025, maybe 3 to 4 more cuts are forecasted. The market seems to like this. Consumers seem to like this. I wonder if this is going to be all priced in ahead of time, where as we get to the rate cut cycle in September, maybe the market is kind of exhausted. Maybe the market keeps plugging through and ripping through the end of the year. All this is very possible. But anyway, I show this. It's like Wednesday was a directional day, Thursday was a directional day, and Friday was a directional day. Now, that's a lot. And again, most people don't see this because all you see in the news is all-time highs, all-time highs. And everyone gets, okay, cool. My 401k is doing well. My investments should be doing okay. But let me show you this chart here, okay? I still think, and this is what I'm doing on my personal side, I have some trades in that I'm doing some very probable trades with simple mechanics. I'm looking at an opportunity where if this market wants to melt up a little bit, I'm turning in. Let me use a drawing tool here. I'm putting in a trade that the strategy it's an option strategy called a broken wing butterfly, and it's not to get fancy or anything, but basically it's this. Okay, price is right here on the instrument that I'm trading. So I'm trading SPX and I'm trading NDX. If price goes up a little bit, okay, so this is price going down, this is price going up. Okay. I have a trade on that I can generate income all the way up to these levels. So if price goes up, I'm generating about $3 of credit right here. And per contract, if I did one contract, I'll make $300 on the trade. Okay. Now this trades out a couple of weeks. I've got this for all my clients. So, I mean, this is probably like a 1 to 1.5% position. Give or take on $3 is no big deal. But the best part is this is a 9x payout. And what I'm looking to do here is I'm constructing this trade in a way that if price were to continue to drift higher, this price moving up into my trap allows me to make 9 times what I'm risking. Okay. So my risk here, my dollar amount here for $3, this would give me about $300 per contract. This gives me $3,000 per contract. So it's roughly 9 to 10x. Now, the probability of getting that is fairly slim because this is by expiration. It's got to be sitting in this trap zone. If it is, awesome. If it's not, this is my probability trade, about 92 to 93% probability. I'll take that probability all day, make my $300, do it 1,000 times and make a bunch of money. All that's good. But that's what I'm doing right now for some drifting to the upside. Now to the downside, I am hedged out to the end of September in case this market is going to follow some of the technicals that I see. I see overbought conditions. I see a lot of reasons for the market to stall. I see a lot of reason for the markets to dip. I don't know if the weekend news with Trump in Pennsylvania, if that's going to affect the markets positively or negatively. This is not the time or the place to have that discussion on what everyone thinks about it. I've got my own opinion. Doesn't really matter what I'm trading in the markets, and however the markets react and what the sentiment is. What I think is possibly getting leaned into is if the Fed's going to cut, we're probably seeing a Republican, nomination / win coming in to 2025. That's just my thoughts. So does the market like that? Does this get all priced in ahead of time? This is what the market likes to do. Buy the rumor, sell the news, right? So I don't know how aggressive and how ridiculous this market gets. Technically, it's overextended. I do still expect there to be some type of uncertainty just to play out technically. The Fed is not changing its language, but the market is certainly thinking the Fed's going to cut rates in September. This is a very high probability right now. We were down around 45% back in probably April, okay? And that has increased now to 88%. That the market expects the Fed to cut rates by 25 basis points in September, right? We still have an FOMC rate decision, which will be nothing. They're likely not going to do anything here in July. 95% nothing happens. But then it's going to be quiet in August. It's going to be earnings season, which we actually kick off this week in a big way. We have 116 companies reported earnings this week. But in September, this is when the market's actually expecting the rate cut's going to be in. Now, August and September are typically sideways or down months in the market. And then Q4, we ramp up with finish the end of the year. We've got all these open interest levels. Market tries to get every ounce of profits out of it as it can. But September to December, a couple of rate cuts. I look out to September 2025. Right now, the market's forecasting about a 2%, about a 1.75 to 2% change in interest rates. Now, is that a good thing? Sure. What does that do? That changes probably a lot of things for the housing market. That changes a lot of things for financing. That changes a lot of things for corporate interest rates, right? Refinancing debt. If we're seeing a 2% difference or 1.75% difference, this is probably a healthy thing for the U.S. economy. Now, the question is it too little, too late? Is the Fed not cutting enough? Are they cutting too soon? We don't know. And nobody knows. And I'm not going to pretend like I do know. Okay. So what I'm doing is I am going both ways with very crafty mechanical trades, high probabilities, and I will just continue to grind. So if we drift up a little bit higher, I can get paid up here with a trap. If we fall and we fall big, I have $30,000, $40,000, $50,000 of hedges in my portfolio that would protect any type of drawdown that I would incur. So I'm not necessarily looking to say, I'm going to make a bunch of money on the hedge. I'm not. What I'm going to do is I'm going to profit on the hedge to wash away any drawdowns. So basically, if my account is at, I'll just use an easy number. Like if my account's at $100,000, I could see the market drop 10, 15, 20%, and my account is still going to stay at $100,000. That's my plan. So I don't want, any of my clients to experience a drawdown. I'm trying to avoid that as much as I can without paying too much for these hedges. So I'm trading both ways. This is typically what I do, but I'm looking to generate some income. I'm looking to protect myself, and I just stay mechanical, keep to the probabilities. And as I say, process equals profits. So that's it, Brandon.
I love it. I love it. All right. So let's continue. One of the things that I love is that you can start from January to now, and you can see that the quality of the information that you're giving to our community is, so important. And I don't think that they really understand what they have and what to do with it. So at some point, we probably need to, build a website and really just kind of say these are the key points you should look for, how you should either investigate, validate, verify for yourself, and this is how you capitalize on it.
Sure. And I mean, if it helps with Core 4, I mean, as the community grows, it's like we're here every single week and we're talking about this stuff. I mean, anybody can go to the archives of Core 4 and see that we've had pretty good forecast directionally. I've got pretty good income coming in. In fact, last week when the market sold off, 1% on the SPY and 2% in the NASDAQ, 2.5%. I mean, I was at an all-time high for my accounts. So all my clients are doing pretty well this year. We're matching or exceeding the benchmarks, which is always my goal. And I haven't really had to take a lot of ownership. I haven't had to ride NVIDIA hard and make all this money. I mean, I'm just trading mechanically, trying to keep the exposure light. There's some conservative risk. There's some more aggressive risk. There's risk off trading as well. And I'm pretty well diversified between stocks, options, futures, and Forex. So that's what I do.
Yes, and you do it well.
Yep.
All right, buddy. Sounds good. Listen, guys, one of the things that's so important is, like I'm saying, understand what you have. So when you have a great coach, when you have a great situation, if you have a great coach in basketball, then at the end of the day, utilize that information. What we have a tendency to do is we take advantage of it, and we think that it's always going to be there, or we just don't know how to take advantage of it. Maybe that's a better way to kind of describe it. And so unfortunately, time goes by and 10,000 other things take precedence over our time and our efforts. And so we don't get a chance to clearly go after the things that we really think matter. I mean, if you think about it, there are so many people that, you know, maybe thought they would retire by 55 and realize that now at 65 or 75, or they don't see a retirement opportunity in sight, or they have to start doing research on government subsidies. So at the end of the day, all we're doing is trying to take a look. You've got your 9 to 5, you've got your investments, and you've got your retirement. Now, the mindset has to be clear on how you utilize that. And so when we talk about, okay, well, we have the core forecast and now we have the core 4 report and all the rest of that stuff, what we're really giving you guys is a guide. And this guide is what we're using. So I'll give you an example. So we have the core 4 bot. And so the core 4X bot is basically designed for you to have an employee that works for you for $1,500. That's what it is. And so it's a set it and forget it opportunity where the bot does the work for you. And so you get results whether you're there or not. There's very little maintenance to do. And so if you follow the trend, then you will notice that you're going to make more and more and more and more and more. And so over time, as your account grows, you take your profits out, you take your initial investment out, and then now all of a sudden you're just playing with house money. And it's not our house money. This is your money in the account, and this is your money that you're able to extract from the Forex market. Very powerful tool. We have another tool that we have, and Eric is on the line waiting to come on, and that's yield farming. Yield farming is very powerful because all we're doing is making money on the transactions that are happening based on the money that we've allocated and split up for the payers that we've decided that we want to work with. And so when there's some transactions that are happening, the fees, we're getting paid on those fees. Now, the beauty is that, you're looking for where there's the most liquidity and all the rest of these things. But this is where Eric comes in because he's a master at it. And he teaches you through his course how to do it for $650, which is normally like $3,000. So take advantage of that. And so with that, I'm going to bring on Eric, and you guys get a chance to meet him. And each week he's coming on so you guys can actually see him, learn from him, and also know what's next. So here we go. Hey, buddy.
Man. How you doing?
I'm doing okay. How about yourself?
Oh, been busy today. I made some improvements to the course. I'm putting a lot more stuff in there. This week I do that, when I do the presentation, the biweekly presentation, I'm going to reveal a bunch of new things in there. I got tools in there. I have new picks, and a way that I'm going to be delivering the picks for the different pools.
Okay.
And just I'm continuing to build by adding videos on specific strategies. Because if you are doing this for a long time, you start to come up with questions about, and we talk about that stuff every 2 weeks. And now I'm trying to put some of those videos into the courses to just make it easier on people. Again, the yield farming to me is one of the easiest things you can do if you're just doing it for yourself.
Yep.
It's not labor intensive. If you're just trying to get 10% a month, you pretty much don't have to work very hard for that. But of course, there are a lot of guys that come in every 2 weeks, a lot of people that are trying to do 30% a month, and they're really aggressively trading. And when you get to that, that's why I like having those meetings, and we're all sharing. It's not just me sharing, it's them sharing too what they're learning. So it's a great community of people. I'm trying to respect that by putting more information in each time. I have a lot of friends that are in this industry that I speak with, so I'm trying to now start to include some of their concepts and ideas in there.
I love it. I mean, I like what you're saying. I mean, community is where it's at, and trying to understand where to allocate your funds. I mean, of all the projects that we promote in Core 4, it's very light active investing that you have to do with yield farming. It does not take a lot of time. It takes, let me just check in, let me see it, let me go off of what Eric is saying in terms of how I need to rebalance any of this. And that's really it. And so, my hat goes off to you for what you're doing. And I love the fact that the course is improving. You're constantly adding to it. And that should be what, really the community wants to know, is how successful they can be. So, that's great. So when will the course be completely updated?
Well, I've already made some updates over the last couple of weeks. And I'm adding things almost every in between every 2 week meeting that we have. I'm adding things.
Good stuff.
So I'm really trying to completely revamp the picks area, because I only have like 2 or 3 picks in there, and they're always the same ones. And it's really just because I've been trying to keep people on a conservative path, but I want to give more variety. And so I'm going to start adding a lot more picks in there.
Well, thank you for letting the community get to know you. And, by them seeing you here each and every week, they've got to be building confidence that, the people are transparent, that are leaders within Core 4. And so obviously you're one of them. So thank you.
Yeah. Blessings.
All right. See you next week. All right, guys, look, the deal is that every single opportunity that we offer here, we're trying to help you to understand that you don't have to figure anything extra out. When we say chase your dreams, I'll give you an example. Like, I'm chasing my dream as a basketball trainer, as a basketball coach. And even at my age, I have hoop dreams, not to play, but to basically pour into other people and see what I'm teaching kind of flow through them and the quality of their decisions that they're making on the court. But the same thing goes here with what I'm sharing. And so we love the idea. Like at first, when we first started Core 4, we were kind of like, okay, we need to keep the price at a certain price point for the value and to make sure, but look, here's the deal. If I'm making money, if Chris is making money, if Sonya's making money, if India's making money, if Eric is making money and stuff, and there's a value to that, if you could make $100,000, then you need to pay a commensurate amount to get that education. Just pay the amount to get to it. We're doing our best to make sure that we keep the costs low. But at the end of the day, what Eric is saying is 10%, $650 to get the opportunity to get a chance to make 10% on your money. And so everybody's journey is different. So we also offer Kong. And so Kong is through QuantumBots, and you can go directly to QuantumBots and pick it up, but you won't get it for the price that, we're able to give it to you at. And that is, they're offering it at $12,000. And then if you decide to, what your minimum investment would be $10,000, then that's fine. And so the Kong bot, you can actually see it directly on FX Blue. And so you can see how well the calling bot has done. It's done over the past 500 days about 1,200%, which is ridiculous, but it's all, and that's on its conservative settings now. You have to learn a little bit more about it because it started off aggressive and it was able to really, take that 12,000 initial investment and now it's up to like 160,000. But you'll see it. And so what would it have been like if it would have been 120,000 that would have been invested? It'd be in the millions right now. So our goal is to help you to understand our journey. And so I'm on that journey. And so I've deposited some disposable money, meaning that, I'm not a financial advisor, but I'm telling you that I am participating in this, and it's to show the journey. And anybody that's interested in the journey, you guys can either look at my FX Blue account personally, or you can contact us, and then I have no problem showing it to you. We also have the Coinbase Trader. And so the Coinbase Trader is $34.99. Okay, pay it. It's been great. The beauty is that the money stays in Coinbase. You actually hook up an algorithm API directly to your Coinbase account, and it does the trading for you. Now, with it doing the trading for you, the beauty is that uh, that that it's going to basically buy low and sell high. So when it's buying low, it may take 2 weeks, 3 weeks, or whatever for it to actually come out of that position. But you get to choose which particular, cryptos that it's going after. I have it going after, well, it's in 4 now. And so 3 of them are active, and 1 of them I'm just trying to transition out. And so whenever it does, it does. And so you see your asset balance go up and down, but you'll also see it go up and down directly in Coinbase. And it does not have any control over your money. It's fantastic. And so the final thing that I want to talk to you guys about is our case study. Our case study is Miracle Cash and More. Eventually, we're going to bring on one of our leaders in there, but Miracle Cash and More is the Phoenix token. And what I've learned is that had I invested in the Phoenix token when it first came out, even if I would have put $1,000 in there, I knew the first day that it came out how much it was. It was 0.000007 or something like that. And if I would have bought $1,000 worth of it, or even 500, or even $100, and I didn't do it because I'd already had some Phoenix token, or I already had what's called a share in the company. But it's now at like 19.24 cents, somewhere in there. And so there were a lot of people that became, super wealthy immediately. And wow. So we want to like at least study those things. And so off this line, off the show, we actually have a community of people that are working together, really learning about it and actually participating. And so as the company grows, the value of their positions grow. So if you are interested in learning more, we're here to share it with you. We're here to show it to you, and we're here to make it a part of your life. So we mentioned it here so that you can grow. So this is how Core 4 chases its dreams. And so all of the participants that are in Core 4, you're choosing to do whatever it is that you want. It doesn't really matter if you choose one or the other, or you may leverage one. You may go from one opportunity, let that build to the next, build to the next, build to the next. And there's no guarantees of success. If we take, the binary options, for a long time I was watching it. We added it to the Core 4 education. And then we felt that, gambling with the strategy is still gambling. We really want to make sure that we're investing, and from those investments, we're able to take things to the next level. So at any rate, from all of us here at Core 4, we want to say thank you very much for your time and your interest. We love you whether you like it or not, and we'll see you next week.